Stop scrolling. Seriously. If you're a senior receiving Medicaid, SSI, or any kind of means-tested government benefit, you need to hear what I'm about to tell you, because this is one of those things that could quietly destroy your financial security without you even seeing it coming. Most people don't realize what's happening until they get that letter in the mail saying their benefits have been suspended or terminated, and by then, the damage is already done. So stay with me for a minute, because what I'm about to share could literally save your benefits. And I mean that. Here's the situation. In 2026, the rules around bank deposits and government benefits are more important than ever. And there's one specific scenario that catches thousands of seniors off guard every single year. It involves a deposit, sometimes as small as $10,000, landing in your bank account. Maybe it's a gift from your kids. Maybe it's an inheritance from a relative. Maybe it's the sale of something you owned. Maybe you just saved up over time and moved money around. Doesn't matter where it came from. What matters is what that deposit does to your eligibility for certain government programs. And in 2026, with new oversight tools and updated federal tracking systems in place, the consequences are faster and more severe than they've ever been before. So, let me take a step back and explain this from the beginning, because I want to make sure everyone watching understands exactly what's going on, not just the people who are already familiar with government benefit programs. I want to explain this in plain English, because this stuff is genuinely confusing, and the government does not make it easy to understand. There are essentially two kinds of federal benefit programs for seniors. The first kind is what we'd call entitlement programs. Social Security retirement benefits fall into this category. Medicare falls into this category. These are programs you paid into during your working life. You paid those payroll taxes, you earned those credits, and when you reach the right age, you receive those benefits. Now here's what's important. For these programs, your bank account balance generally does not matter. You can have $1 million sitting in savings and still collect your Social Security retirement check every month. Your assets are not the deciding factor. Your work history and your age are. So if Social Security retirement is your only benefit, take a breath. A $10,000 deposit is not going to automatically cut you off. But, and this is a very big but, there is a second category of programs. These are called means-tested programs. And this is where things get really serious. Means-tested programs are benefits that are specifically designed for people with limited income and limited resources. They're not based on your work history. They're based on your financial need. And the two biggest ones that affect seniors are SSI, Supplemental Security Income, and Medicaid. Now, you might be receiving one or both of these and not fully realize the rules attached to them. A lot of seniors do. And if you're in that group, this video is absolutely critical for you. Let me explain SSI first, because the rules here are crystal clear and they are strict. SSI is a monthly cash benefit paid to seniors and people with disabilities who have very low income and very few assets. In 2026, to qualify for SSI, an individual cannot have more than $2,000 in what the government calls countable resources. A couple cannot have more than $3,000. That's it. That is the limit. Now, I know what you might be thinking. $2,000? That's barely anything. And you're right, it is a very tight limit. But that's the rule, and it has been that way for a long time. Congress has been slow to update it, and while there have been some discussions in recent years about raising those limits, as of 2026, the core thresholds remain extremely low for individuals and couples. So, here's what happens when that $10,000 deposit hits your account. Let's say your daughter sends you $10,000 to help you cover some medical bills or home repairs. She loves you, she wants to help, it comes from a good place. That money lands in your checking account on a Tuesday morning. And just like that, in the eyes of the Social Security Administration, which runs the SSI program, you are now over the resource limit. you are no longer eligible for SSI. Your benefit could be suspended immediately, and depending on how long that money sits in your account, you could be required to pay back any SSI you received during the months you were over the limit. That's called an overpayment, and the SSA will come for that money. They are not gentle about it either. They can garnish future benefits, they can set up repayment plans, and if they determine the situation was not reported, it can create even more serious problems. Now stay with me, because I want to make sure I explain the Medicaid side too, because this is where things get even more complicated for a lot of seniors. Medicaid is the federal and state health insurance program for people with low income and low assets. For seniors, Medicaid is often the program that covers long-term care, things like nursing home stays, home health aides, and assisted living. Medicare, which most people know, generally does not cover long-term custodial care. Medicaid does. And for millions of seniors, Medicaid is the only thing standing between them and financial ruin when serious health needs arise. But Medicaid also has resource limits, and while they vary by state, they are generally in a similar ballpark to SSI, very low. In many states, an individual can only have around $2,000 in countable assets to qualify for Medicaid long-term care coverage. So, when that $10,000 deposit hits, the same problem occurs. You're suddenly over the limit. Your eligibility gets disrupted. And here's the part that a lot of people don't realize. Medicaid agencies are now more connected to banking data than they've ever been. In 2026, state Medicaid agencies have access to data sharing systems that allow them to cross-reference financial records during eligibility reviews. These reviews happen regularly, sometimes every 6 months, sometimes annually. And if they find a large deposit that wasn't reported or assets that pushed you over the limit, your coverage can be interrupted. And if you're in the middle of a health crisis when that happens, the consequences can be devastating. Let me give you a real example of how this plays out, because I think it makes the stakes much clearer. Imagine a 74-year-old woman. Let's call her Dorothy. Dorothy lives alone in a small apartment. She receives SSI every month, about $900 and something, and she has Medicaid, which covers her doctor visits and her prescriptions. She doesn't have much saved, maybe $800 in her checking account at any given time. Her son lives 3 states away and worries about her constantly. One day, without really thinking through the implications, he transfers $12,000 into her account. He wants her to have a cushion. He wants her to feel safe. It is a loving gesture. But here's what happens next. Dorothy is now over the SSI resource limit by more than $10,000. When her next eligibility review comes up, or when she reports the deposit, as she is legally required to do, the SSA determines she has been ineligible for SSI for the months since that deposit. They calculate an overpayment. She now owes money back to the government. At the same time, her Medicaid eligibility is disrupted because she's over the asset limit. She loses her health coverage. Her prescriptions, which she depends on, are now out of pocket. It is a cascade of consequences that started with one well-meaning bank transfer. This happens more often than you would believe. And the tragedy is that Dorothy and her son did nothing wrong in terms of intent. They just didn't know the rules. And in 2026, not knowing the rules is more costly than ever. Now here's what I really want you to understand, and this part is important. It's not just large gifts that can cause this problem. It can be an inheritance from a relative who passed away. It can be the proceeds from selling a car or a piece of furniture or jewelry. It can be a legal settlement. It can be a tax refund in certain cases. It can be back pay from a disability claim. Any lump sum of money that lands in your account has the potential to affect your means-tested benefits if it pushes your total resources over the allowed limit. The source of the money doesn't automatically protect you. What matters is what the money does to your resource level. And let me say something else that catches people off guard. The $10,000 figure I keep mentioning is significant for another reason beyond benefit eligibility. Banks are legally required to file what's called a Currency Transaction Report, or CTR, for any cash deposit over $10,000. This is a federal requirement under the Bank Secrecy Act, and it applies to cash transactions. It's not a penalty, it's just a report that goes to the Financial Crimes Enforcement Network. But here's the thing. Some people have heard about this rule and try to get around it by making smaller deposits just under the $10,000 threshold. Maybe they deposit $9,000, then $8,000, thinking they'll avoid the reporting. That is a serious mistake. That practice is called structuring, and it is a federal crime. I cannot stress this enough. Even if the money is completely legitimate, deliberately breaking up deposits to stay under the reporting threshold is illegal. Don't do it. Don't let anyone advise you to do it. This is not a loophole. It's a trap. So now you're probably wondering, okay, what do I actually do? What are my options? How do I protect myself? The first and most important thing I want to tell you is this. Talk to someone before the money moves. If you know a large sum of money is coming your way, an inheritance, a gift, a settlement, anything, please talk to a benefits counselor or an elder law attorney before that money hits your account. Many states have what are called SHIP programs, State Health Insurance Assistance Programs, which offer free counseling to Medicare and Medicaid beneficiaries. There are also legal aid organizations that specialize in elder law and benefits protection. Getting advice before the deposit is so much easier than trying to fix the damage after. Second, understand what counts as a resource and what doesn't. Not everything you own is counted against you. Your primary home, for example, is generally excluded from Medicaid resource calculations if you live in it or intend to return to it. One vehicle is often excluded. Certain burial funds up to a specific value may be excluded. Personal belongings and household goods are often excluded. The rules are different by state and by program, so you need to know exactly which assets count and which don't for your specific situation. Third, and this is something a lot of people have never heard of, there are legal tools called special needs trusts or ABLE accounts that can allow a person with a disability to receive and hold money without it counting against their SSI or Medicaid eligibility. ABLE accounts in particular, named after the Achieving a Better Life Experience Act, allow eligible individuals to save money in a tax-advantaged account that doesn't affect most benefit programs. In 2026, the contribution limits and eligibility rules for ABLE accounts have continued to evolve, and if you or your loved one is eligible, this could be a powerful tool for protecting benefits while still having financial flexibility. Please look into this. Fourth, if you are the family member of someone on SSI or Medicaid, a son, daughter, grandchild, anyone, please have a conversation with your loved one before you send them money. Even though your heart is in exactly the right place, an unexpected transfer could trigger an eligibility review, an overpayment determination, or a disruption in coverage that takes months to fix. There are ways to help someone financially without creating a benefits crisis, but you need to plan it carefully and often with professional guidance. Now, I also want to spend a moment on scams because this topic attracts them. In 2026, there is an entire cottage industry of fraudsters who prey on seniors by offering to protect their benefits for a fee. They call it asset protection. They claim they can shelter money in ways that are perfectly legal. Some of them are operating in genuinely gray areas. Some of them are outright lying to you. If someone calls you unsolicited, sends you an email, or knocks on your door offering to help you hide assets to preserve your Medicaid eligibility, please be very cautious. Some techniques that are marketed as legal are actually forms of Medicaid fraud that can come back to haunt you or your family members in serious ways. Medicaid has what are called look-back periods. In most states, they look back 5 years at your financial transactions. If they find gifts or transfers that look like you were trying to reduce your assets to qualify for Medicaid, they can impose a penalty period during which you are not eligible for benefits. The look-back rules are complex and unforgiving, and the consequences of getting them wrong are severe. The bottom line here is this: the system is complicated, the stakes are high, and the consequences of a mistake can follow you for years. But here's what I want you to take away from this video more than anything else. You are not helpless. There are resources, there are professionals, there are legal tools available to you. You just need to know they exist and be willing to ask for help before a problem develops rather than after. Let me also quickly mention what's new specifically in 2026 that makes this more urgent. The Social Security Administration has been upgrading its data matching capabilities. There is increased coordination between SSA, state Medicaid agencies, and financial institutions. Eligibility reviews are being processed faster, and discrepancies between reported assets and actual bank balances are being flagged more quickly than in previous years. The days of things slipping through the cracks for months before anyone noticed are fading. The system is getting tighter, which means your window to correct a mistake before it becomes a formal overpayment or eligibility termination is getting shorter. Going forward, it's also worth keeping an eye on any legislative changes that could affect the asset limits for SSI. There have been ongoing advocacy efforts to raise that $2,000 individual limit, which hasn't been meaningfully updated in decades. Some proposals would raise it to $10,000 or even higher. But as of right now in 2026, those changes have not been enacted into law. So plan based on the rules as they exist today, not as advocates hope they will someday be. And one more thing before I wrap up, please share this video. I mean it. There are seniors right now who are about to receive an inheritance, or whose children are planning to send them money as a holiday gift, or who are about to sell a car, and they have no idea that a single deposit could unravel their benefits. They haven't seen this video. They don't know these rules exist, and the people around them, their kids, their grandkids, their neighbors, they don't know either. You sharing this could be the thing that prevents someone you love from losing their health care or their monthly income check. Don't leave money on the table. Don't lose benefits you've worked hard to keep. Stay informed because the rules change, the systems change, and the people who understand those changes are the ones who come out okay. Check your eligibility. Reach out to a benefits counselor before a big deposit hits your account. Talk to your family members about the rules that apply to you. And if you've already had something like this happen, if you've received a letter about an overpayment or a disruption in benefits, please don't ignore it. There are appeal rights, there are waiver processes, and there are people who can help you navigate them. You have options. Use them. Stay safe out there. Stay informed. And share this with someone who needs to hear it, because right now, there's somebody scrolling past this who really, really does.